Why Warren Buffett is selling stocks. Is a market crash coming? Warren Buffett, widely regarded as one of the greatest investors of all time, has built his fortune by making smart, long-term investments. As the chairman and CEO of Berkshire Hathaway, his moves are closely watched by Wall Street and individual investors alike. Recently, Buffett has been selling off billions of dollars in stocks, raising concerns about whether a major market downturn is on the horizon. Given his track record of navigating financial crises and economic downturns, Buffett's decision to offload stocks instead of buying more could be a warning sign that a market correction or crash is coming. In this video, we will analyze why Buffett is selling stocks, what this could mean for the broader market, and how investors should prepare for potential volatility. Buffett's recent stock sales, a shift in strategy. Historically, Buffett has been known as a long-term investor who rarely sells stocks unless he sees fundamental changes in a company or the market as a whole. However, over the past year, Berkshire Hathaway has significantly reduced its holdings in several major companies. Some of the most notable stock sales include Apple Inc. AAPL. Apple has been one of Buffett's most successful investments, making up a significant portion of Berkshire Hathaway's portfolio. Despite this, Buffett has been trimming his stake in the tech giant, selling billions worth of shares. Chevron, CVX, and Occidental Petroleum, Oxy. Buffett has reduced Berkshire's exposure to the energy sector, selling portions of its holdings in major oil companies. Financial stocks. Buffett has also cut stakes in financial institutions like Goldman Sachs, JP Morgan Chase, and US Bancorp. Additionally, instead of aggressively investing in new companies, Buffett has been hoarding cash at an unprecedented level. As of his latest financial disclosures, Berkshire Hathaway is sitting on over $150 billion in cash, the highest cash reserve in the company's history. Why is Buffett selling stocks? Buffett's decision to sell rather than buy has led to widespread speculation. Here are some possible reasons behind his cautious approach. 1. Stocks are overvalued. Buffett has always been a value investor, focusing on buying companies when their stock prices are trading below their intrinsic value. However, the stock market has been hitting record highs, with many companies trading at inflated price-to-earnings (P/E) ratios. The S&P 500, for example, has been propelled by the rapid growth of tech stocks such as Apple, Microsoft, and Nvidia. However, Buffett may see this surge as unsustainable, believing that stock prices have outpaced actual corporate earnings and are due for a correction. Buffett has often warned about market bubbles and speculation, famously stating, "Be fearful when others are greedy, and be greedy when others are fearful." His recent actions suggest that he believes the market is currently in a greedy phase, where stock prices are too high relative to their true value. 2. Economic uncertainty and recession fears. Another major factor influencing Buffett's decision could be economic uncertainty. Several indicators suggest that the US and global economies could be headed for a slowdown or even a recession. Rising interest rates. The Federal Reserve has aggressively raised interest rates in an effort to curb inflation. Higher interest rates make borrowing more expensive, which can slow down economic growth and hurt corporate earnings. Slowing consumer demand. Many companies have reported that consumers are cutting back on spending due to higher costs of living. This can lead to lower revenue growth and reduced profitability for businesses. Geopolitical risks. Conflicts, trade tensions, and global instability have created a more unpredictable investment environment. Issues such as the Russia-Ukraine war, China-US trade relations, and energy supply chain disruptions add another layer of risk. Buffett is known for his ability to anticipate economic shifts before they happen. By reducing exposure to stocks now, he may be positioning Berkshire Hathaway to weather an upcoming downturn. 3. Building a war chest for future investments. Buffett's growing cash reserves could signal that he is preparing for a market correction. Historically, Buffett has taken advantage of bear markets by scooping up high-quality stocks at a discount. For example, during the 2008 financial crisis, Buffett made some of his most successful investments, including buying shares of Bank of America and investing in Goldman Sachs when their stock prices had plummeted. By selling now and holding onto cash, Buffett is putting himself in a position to buy undervalued stocks when prices drop in the future. 4. Concerns about corporate debt and market stability. Buffett has also expressed concerns about the increasing levels of corporate debt. Many companies have relied on cheap borrowing to fund expansion, stock buybacks, and dividend payments. With rising interest rates, these debts become more expensive to manage, increasing financial strain on corporations. If too many companies struggle to pay their debts, it could trigger a broader market sell-off and financial instability. Buffett may be preparing for this scenario by reducing Berkshire's stock exposure. Is a market crash coming? While Buffett's recent actions are concerning, they do not necessarily guarantee an imminent market crash. However, there are warning signs that investors should pay attention to. Inverted yield curve. A well-known predictor of recessions, the yield curve has been inverted for an extended period. This indicates that investors expect economic trouble ahead. Corporate earnings slowdown. Many major companies have lowered their earnings forecasts due to weakening demand and economic uncertainty. High levels of debt. Both consumers and businesses are carrying record levels of debt, which could lead to financial stress in a high interest rate environment. That being said, markets are unpredictable. While a correction or downturn is possible, it is also possible that stocks could remain strong due to continued economic resilience and technological innovation. What should investors do? If you're wondering how to navigate the current market environment, consider the following strategies based on Buffett's approach. Avoid panic selling. Buffett's strategy is not to sell everything and exit the market entirely. He is reducing exposure but still holding onto strong companies. If you have a well-balanced portfolio, avoid making rash decisions. Focus on value investing. Instead of chasing high-flying stocks, look for companies with solid financials, strong cash flow, and sustainable competitive advantages. Hold some cash reserves. Keeping cash on hand allows you to take advantage of market dips. If stocks fall, you can buy high-quality assets at a discount. Diversify your portfolio. Don't be overly concentrated in one sector. Spread your investments across different industries and asset classes to reduce risk. Think long-term. Market downturns are a normal part of investing. If you invest with a long-term perspective, you are more likely to ride out short-term volatility. Warren Buffett's recent stock sales suggest that he is taking a cautious stance on the market. While this doesn't necessarily mean a market crash is imminent, it indicates that Buffett sees increased economic risks. With rising interest rates, high stock valuations, and global uncertainty, Buffett's decision to reduce his stock holdings and hold onto cash may be a strategic move to prepare for future opportunities. Investors should pay attention to Buffett's warning signs but remember that timing the market is incredibly difficult. Instead of making impulsive decisions, focus on building a well-balanced portfolio, holding some cash for future investments, and thinking long-term. What do you think about Buffett's stock sales? Do you believe a market downturn is coming? Let me know in the comment section below. What do you think of our video? If you enjoyed this video, make sure to hit that like button. Also, subscribe to our channel before you go. Thank you for watching.